it turns out payroll systems don't have a deep history in consumer permission data. And so as we got deeper into it, we found out we're actually in the driver's seat more than we thought we would be. And it's our responsibility to make sure that we have the right guardrails in place and make sure that when we want to integrate with a payroll system and do a partnership, for example, we steer them in the right direction to proven gold standard patterns that we know work at scale.
Welcome to the Galileo Financial Technologies Podcast. I'm your host, Scott Henderson. We're here to delve into the thrilling world of fintech and banking, exploring the latest trends, innovations, and disruptions. Every episode features insightful chats with industry leaders and visionaries who are pushing the boundaries of finance and banking. Whether you're passionate about fintech, running a startup, leading a large bank, or just intrigued by financial technology, this podcast is your go-to source for staying ahead. Let's dive into the future of finance and banking together.
Good morning. Welcome to day 2 of FinTech NerdCon 2025. I have with me Scott over here, who I'll introduce in a brief minute. Myself, I'm Prashant Shah, VP of Product at Galileo Financial Technologies. Scott, why don't you introduce to the team?
Thanks for having me, Prashant. Yeah, I'm Scott Weiner. I'm co-founder and CTO at Atomic Financial and been here for about 6 years now.
Awesome. You want to go a little more deeper into how did you start founding Atomic and so on, and your journey into fintech?
Yeah, sure. So my co-founder is Jordan Wright, and this is our second company together. And the first one, we actually started in the student housing space, helping students find a place to live.
Which university were you at?
Oh, we were over at Brigham Young University. Yeah. We eventually moved the business to Austin, Texas, where there were a lot of universities.
And there.
Okay, nice. Yeah, it was a fun place. And I have 4 kids. It was a great place to raise little kids. And anyways, I think that we found that market was really challenging to monetize, even though we had scale. And we were basically doing an ad spend game with Zillow and Trulia. And you can imagine how fun that would be. And we just decided to focus on another problem that we saw the students have, which was an acute pain, which was splitting bills. So we ended up building a bill splitting platform for students where they could each pay their portion of the bill rather than someone paying and then Venmo and Cash App. And what we saw in the data was that people just started to use this to pay their own bills because it was just a great way to keep everything integrated. And it became more of a product for individuals and families. And that's when, I guess, bill pay was really starting to decline in usage. And so we decided maybe there's a B2B play here. And we, on a kind of a long shot, we went to a conference, did a demo in New York, and Q2 out of Austin, Texas, which we happened to be from, said, hey, we're looking to make an acquisition in this space. So that's when they bought our company, and we integrated our technology there to turn bill pay into a revenue generating area instead of just a cost center. And that was how we got into fintech. And yeah, it was a really fun journey, and we ended up falling in love with the industry. And I could say, I wouldn't say falling in love with Jordan, but he was a great co-founder. And we decided we should go do something together again once this journey is through.
Absolutely. It's wonderful when, you automatically find the product market fit.
Yeah.
You start out to do something, but you find it something even better for it. So that's great. So something that you built Atomic towards is to focus on the account primacy and financial connectivity at a time when most fintechs were chasing consumer-facing features. So could you talk a little more about why this particular piece, why account primacy?
Yeah. So when we went to come up with ideas for our company, we first thought, what if we could make the account onboarding experience really special? Because we felt like it was always a point of friction. You can't just create an account and start using it. So we started to get into that problem and see, is there a 10x improvement on this area of banking? As we got deeper, we found that there really wasn't. And the reason was just because the infrastructure to actually create 10x gain there did not exist. It was nowhere to be found. Everything you could do to innovate would just be above the glass when the real problems were below. Yeah, far below. And so we decided, what is that infrastructure? Is there a piece of that we could build? And I think from building what you could call boring technology and plumbing below the glass at our last venture, we loved it. And we were obsessed with that, quote, that boring part of it. And we went back to step one and started interviewing banks and fintechs. And we found that like direct deposit, for example, was manual, fragmented forms, PDFs being sent around, and which was a shame because it actually changes the economics of an account entirely once achieved. And so this kind of shark bite pain, we just got sucked into it. The gravity of it was so compelling. We decided we could leverage our experience in automation and connectivity and build this piece of the infrastructure, and then let's like see where that goes.
Yeah, no, makes sense. Making boring definitely disappear from a consumer's life is the best thing, right? That's wonderful. So, like you were talking about direct deposit switching, right? Payroll integration, these are not flashy or infrastructure level problems, right? They are really basic problems, which are some things that most people do it once in their lifetime or whenever they switch jobs and forget about. Yet you have started scaling with many of the top 10 financial institutions and bringing this out there. So what do you like? How do you see this? How are institutions thinking about bringing differentiation in this market?
Yeah, great question. It isn't flashy. You mentioned it's not flashy in an AI demo sense, but I think the profitability of it is extremely flashy. And so, for example, back in February, a top 10 financial institution launched with us, and they've been ramping up, and they've already seen almost 20 million in just incremental profit to their company just from launching our solution. So a product that monetizes itself that fast and pays for itself in month one. And the other thing is it does it quietly because they've had less than like 50 support inquiries over this entire time period. They obsess over that stuff. Yeah, maybe it's not the flashy thing on the screen, but it's really compelling. And I think as you asked about differentiation and competitive nature of it, it's interesting to be in our position where we see all of these financial institutions and fintechs that are figuring out how do they acquire direct deposit. And we'll see two institutions that on paper look very similar, but then when you look at their direct deposit conversion rates, one could be double the other. And that's a really fascinating thing for us to see. And we've tried to reverse engineer, is there a secret sauce, a key feature set that a bank can build that will get users to move their money over? And we found that there really isn't, actually. And I think it's actually more about the banks understanding their users. An example would be something like Chime MyPay. They've figured out how to answer the question, what's in it for me to move my money over to this bank? And if having a clear answer to that is delivered at the right time, that is a magic sauce. And we work with 9 of the top 10 banks, top fintechs, and many of them have not figured that out. But when they do, it's so noticeable for us too, because it drives our revenue. That's actually happening.
Yeah, you make a good point, right? Really, that incentive needs to be there. But once the incentive's there, your tech makes it so seamless, nobody thinks about it more. So that fits. I know you are from direct deposit into payment method linking. Do you want to talk a little about that and how that is changing the life of consumers?
Yeah, with these same rails we built on direct deposit switching, at our core in our company, we're really an automation engine. We could automate anything. And recently, we just did a demo at this conference where we showed how we decoupled our automation layer from our core technology so anyone could build automation. So you can imagine all the areas that opens up, including our launching of our payment switching product, which is out in production and it's doing fantastic. We've got so many switches coming through at this point. It's really exciting, and it pairs so well with our suite of Primacy products because you move your paycheck over. Well, now moving the payments that are going to go out of that paycheck, that makes total sense, right? So we're seeing really good uptick, just a natural fit that allows us to kind of land and expand into our current customer base.
Absolutely. And this is what we call the spending loop at Galileo, how we can enable our clients to bring in money first, which is your direct deposit switch, and then spend it. And absolutely. That helps the revenue for our client.
Yeah, and I love that between us, like our customers only have one integration to build as well. So
Absolutely.
that's just beautiful for them. I think allowing them to move fast There's just so many things I think that for them move so slow. And between us, we're really enabling to get that feeling of moving super quickly into really innovative territory.
So obviously, most of our clients will be interested in this. What's coming next?
Yeah. Oh, what's coming next? So we've been quietly building what I would say is the most sophisticated and deepest integration network into merchants that the industry's ever seen, really. And anything from pausing subscriptions, canceling bills, all of that. But there's also some really interesting things like SKU level data, taking your Amazon transactions, combining those with your banking transactions, and you end up with something very special. And it's not just a user experience thing. I think it really is foundational. It's paramount to budgeting, dispute resolution, and really core things that impact the balance sheet of a bank. And so we're really excited about these unlocking a lot of this functionality, the key features that are surfaced through these deep merchant integrations that we've built over the last while.
Believe me and my team look forward to that. We want to really get that.
That's what we feedback. Appreciate that.
Yep. So looking just across the financial services ecosystem, right? Obviously, there are banks, there are fintechs, employers, there are service providers. I know you integrate with all of those. So what's your key role? How do you envision your role as the platform that mediates between all these different stakeholders? Governance frameworks do you use to ensure fair outcomes for the end customer?
Yeah. So one simple principle I would mention here is just making the safe thing the default thing is something that we try to live by at Atomic. For example, we've invested heavily into credential-less authentication, very heavily into that. Just how could we rethink this, invert our architecture, whatever we have to do to make sure users don't send credentials out. Another thing that we think about is just no black boxes, right? Things should be very transparent to our partners, to the banks, to the end user. I think that's something we think about a lot is how do we surface this in the design of it to make it very transparent. The other thing I'd mention is just the fact that when we first started this, we thought maybe the industry would figure out what are the right way, for example, to protect and share payroll data. And it turns out payroll systems don't have a deep history in consumer permission data. And so as we got deeper into it, we found out we're actually in the driver's seat more than we thought we would be. And it's our responsibility to make sure that we have the right guardrails in place and make sure that when we want to integrate with a payroll system and do a partnership, for example, we steer them in the right direction to proven gold standard patterns that we know work at scale. And so that's been something maybe surprising to us is how much we're real pushing that and driving that initiative, I think more than we initially thought we would be.
Yeah, even I'm surprised. I would expect payroll providers to be super sensitive about the data that they have. But like you call out, right, ultimately, there are a bunch of jobs to be done, but your final focus is to make sure that the end consumer gets their money right. That's really what you're looking for. So this takes me into my next question, right? Atomic's mission centers on upward financial mobility for underserved population, right? How does financial connectivity unlock better outcomes for people who have traditionally been excluded from financial systems, right? There are folks who don't even get access to many of these financial systems that you and I just take for granted.
Yeah. As far as a high level principle on that, I think it comes down to friction, a lot of this. And when you can make the right thing to do, also the easy thing, I think that is an overarching thing that we try to implement. I'll give you an example. I think that one of the branch bankers recently told a customer who told us, and I love to hear these stories because I don't necessarily get to hear them not being frontline. Like we're embedded in the bank, but we don't get to hear from the actual users. So we love it when they share these with us. But they said that there was a middle school teacher that came into the branch and it was her last day to switch direct deposit before kind of the system was all locked in and then she couldn't move it again. And they basically just said, hey, get the app, I'll help you set it up and go ahead and find your employer, which she did. 3 minutes later, she has everything configured, didn't have to mess with account routing numbers. Everything was automated. And then she was able to open up like a student checkings account for her daughter and be able to help pay off her husband's credit card. And like all these things, they started to fall in place. And it was this is a classic example. And I'm sure there are millions of these where people just get stuck because the friction, it's hard to move. They just get confused, or they don't cancel the thing they should cancel because they just didn't have enough time because of friction. I think unwinding some of these really confusing things, it does unlock real, like tangible outcomes. And that's super exciting to us. And as another example, and I'm more in your shoes where I don't necessarily worry about my day-to-day expenses as much, but even I ran my data through this system and I found out I had added a international cell phone package to my wife's phone when we went to Peru over a year ago. And so I had to pay, it was $100 a month. So I spent over $1,000 and it just stayed on the plan, right? And this system picked up that had happened. I went and called and they gave me a $500 credit, but that was at least $500 down the drain. And then I cut my internet bill in half. And I sound like a Geico commercial when I talk about these things. But it's so for us, or whether you're living close to the edge, and I think for those that are living closer to the edge, it can be the difference between treading water and actually moving forward these types of products. And I think that's very exciting for us and our mission.
Absolutely. And like you said, even we are the platform layer, and many times we don't hear the stories directly. But when you do hear the stories, it really touches you, how you are exactly. So one more question more around these products and really little more forward thinking. As financial connectivity becomes more commoditized, we are at this conference where you're hearing a lot about stable coins, and this is beyond the traditional finance, which is what you and I have been talking so far. But what do you think is the next frontier in this financial infrastructure, right?
Yeah. This is when I say AI and drop the mic, right?
Go for it. Now the next word is stablecoin, not AI.
Yeah, exactly. I say stablecoin. I think that the next frontier is going to be interesting, and this kind of gets into prediction territory. But some of my latest thoughts are like we have some competition for us on who's going to own this infrastructure and who's going to be the main player. I think that what's being chased right now are a lot of these partnerships for these official integrated rails, and that's interesting. And we were the first ones to sign a deal with ADP to get that on paper and release that to the market. And we're pushing that and getting those, but it's not going to be a competitive differentiator. And the reason is just that the economics don't make sense for any of these relationships to be exclusive, or at least long term. They won't be exclusive. And so that won't be. And I think that's what some of our competition is really chasing or thinking will be exclusive. I think where it really comes down to are this long tail that is huge, right? Like these systems that we're talking over here talking about agent to agent and A2A and all these things we're going to have, but these guys don't even have 2FA, like these long tail billers and utility systems. This is archaic stuff. They don't have engineers that even think or care about what's happening right here at FinTech Vericon, right? And so who's going to do that? Who's going to manage those boring pipes and who's going to have the best in class? And this might sound egotistical a little bit, but I think that we have built the best authentication and secure handling of that long tail than anyone in the industry. And that's going to be a competitive differentiator for us, at least. And we even get a lot of folks coming to us saying, hey, could we use your system to build this or that? And we can't build automation for everything. So that's why we're letting them go, decoupling it from our system and letting them go do it themselves.
Yeah, that makes sense. Especially like I was talking to someone else earlier, traditional finance, fiat, and stablecoins are going to coexist. And like you're calling out, there are going to be strong authentication methods needed across both rails. So makes sense.
Yeah.
So we've talked a lot about Atomic, the products. I want to switch a little bit and talk about you in your own career. You've done a couple of startups, exit successfully. So do you want to talk about how it was with those building those institutions, growing them, and what kind of unique challenges did you face? I know you and Jordan have done, this is your second.
Yeah. So yeah, I've had 2 prior exits, one not in fintech, in the data space, and then the one to Q2 that we discussed previously. and then working with a number of investors and folks on this gig. How was it to work with them, and what unique challenges? It's a great question. I think coming into these like deal making, I'll call it, a lot of it we have to figure out like how are we 1 + 1 = 3. And I think if that's not there, it doesn't really make sense. The other thing that I worry about, one of the reasons I'm not really that interested in selling our company right now, is it is so fun to create the future. And sometimes in those acquisitions, I feel like that can be lost a little bit actually, and that we shouldn't be in a rush to go off, maybe give up the opportunity to really see this vision actually come to life. And I think Atomic is in that stage right now. We're so heads down on what's ahead of us and so excited about it, both as founders and as a company, that we don't think about that really day to day at all. But yeah, I think, and then the other things with the Q2 acquisition, just making sure that it's a good outcome for everybody. There's a lot of negotiation, even post deal, like when you have all your terms in front of you. But what about the individuals in your company, and how do these impact each of those individuals? And it was surprising to me to find myself negotiating pretty aggressively on behalf of all of the employees that had helped build our prior company, to make sure that this was a good outcome for them and for their future. And we were able to do that successfully. But I feel like if you didn't go to bat, it wouldn't have turned out to be something that I could have really been proud of. And I think that was the thing that surprised, the most gratifying thing about that whole experience was really what it meant for the team that was a part of it, and being like a step in their journey to get them to where they want to go in their career and their life. That was so fulfilling personally that I was like, I have to do this again. This is so fun, and I'm going to do it at a larger scale, because it felt like actualizing for me as a person.
That's awesome. That just shows to your leadership, and definitely Jordan, your partner too. So we talked a little bit on the exit side. As you said, you would like to do this again. So I'm sure there are a lot of people here hearing, and people coming out of college, people still exploring new, like how they can take some opportunities and found something. What advice would you want to give to them?
When I started, for example, Atomic, I was in love with the industry. I loved the people that I was going to go tackle it with. But you got to stay divorced from your problem that you're going to solve. Be ready and open to anything that might surface as you're doing your customer research. When we started our first company, Jordan came to my house. Both of our wives were in the public health program at BYU, and we were friends. And he came over with a list of 5 ideas on a scrappy piece of paper, like you'd see in some, back of the napkin stuff. And they were all horrible ideas. And we came up with 3 other bad ideas. And then we did one of the bad ideas. And then we had to pivot our way to success. So just being completely emotionally and personally separated from what you're going to do together, because that is going to change. It very rarely does it not. So just ready to pivot. And then I think just like believing in yourself and your abilities, finding like what it is that you come to the table with uniquely as you, and knowing like who would be a good complement to you as a person. Finding a co-founder. You could do it solo, but I'm really grateful to have found, and it just makes the journey so much better, because you're going to have so many ups and downs. And I think like riding that with somebody is way better.
Yeah, no, those are 3 great advices. Not to be emotionally involved, because there are many times you hear of horror stories where people just didn't pivot. They believed in something so much that they couldn't see it's not working out.
Exactly, Prashant. Yeah.
Finding a co-founder. So really, I appreciate those advice, and I'm sure the people listening will too. It's been great talking to you. Any parting thoughts?
Yeah, just look for what we're doing. We're excited about this next year. And just thanks for listening. And we love working with Galileo here. And we think together we are definitely a 1 + 1 = 3 partnership, or maybe 10. And so, we're looking forward to bringing more of that to all of you.
Yeah, we are excited. We are already premium partner with you. We have both of your products, and looking forward to turning on more of those. Thank you.
Thank you.
This podcast has been a production of Galileo Financial Technologies, with all rights reserved. The content is provided for informational purposes only and is not legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information. You understand that any reliance on this information is at your own risk.